to a really great financial future. Tom and Don are talking real money.
We do talk a lot about investing. Yes, because we think that's the most important thing you can be doing with your money is making sure that the old age part of your life is taken care of. Because I'm sorry, we do start falling apart when we get old. Ow, everything aches. Dang it, doesn't it? Doesn't it, Tom?
No, not talking about
Tom,
it.
Don't
not going
lie.
there.
All right.
Not going there.
Welcome to Talking Real Money. Don McDonald here. Tom Cock there. You there. Glad you are there. And remember, you can call us with your questions at 855-935-TALK, or you can send them in at talkingrealmoney.com. Today, though, change of pace. We want to also help you protect your money. One of our other jobs is keeping you from doing dumb stuff with your money, whether it's investing it dumbly or getting taken in by the annoying so-and-sos who are always looking to scam you, particularly on your devices, your computer, your tablet, your phone. I mean, I got one the other day, opened up my email, and there was an email from Microsoft that letting me know that they were renewing my subscription to something or other for $399. And that if I wanted to cancel, to please call this number. It's not real. It was a scam. And thankfully, it was one of those scams where they misspelled about half the words. But they're getting smarter, and they're looking better, and they're doing things that are very clever. And some of them aren't out-and-out scams. They're just misleading.
They're immoral.
I think immoral is a very, very, very good description. And one of them that I read about recently that I didn't even realize was going on. I read about it in the New York Times. It's a travel scam, Tom. This was very clever.
Sophisticated. After you sent this to me, so I was like, it doesn't sound like it. I went back. My wife handles all our travel stuff, and she said she thinks she got caught up in one of these when we went to Europe last summer, that she booked something that appeared to be a Disney property. I think I told you about this story. And then when she showed up,
and that was not a Disney hotel. Yeah.
No, it was not in any way. But they,
well, what you do is you go, for example, let's type in, let's type in the Grand Floridian here in Florida, near me at Walt Disney World, hotel reservation.
And for those of you who don't know this, because Don's only mentioned it 3,000 or 4,000 times. He and Debbie had the first ever wedding at the Grand Floridian.
We did.
Just so we have that out there. So.
We did. And, Disney must be more aggressive. Let's try how about a Ritz-Carlton? Let's do the Ritz-Carlton at Amelia Island in Florida. I'm just doing this off the cuff. So
he is.
Ritz-Carlton, Amelia Island. And let's see what comes up. It'll have to be something more obscure. I'm not doing. Well, I'll just use the ones from the article. There were a couple in the article. I was going to try it from scratch and see if it worked. But
tell them what we're talking about here.
Okay, what you do is you type in that you want to stay at a hotel.
Yep.
Okay, you want to go on a trip. You want to stay at a hotel. And you type in the name of the hotel, and you type in reservations or something to that effect. And what comes up, you can, in Google, I guess we have to go way back. With Google, you can buy the top positions and in the search. So you can buy to, let's just try this one. The Grand Majestic Hotel in Bologna, Italy.
Yep.
Okay? They typed in Grand Majestic Hotel in Bologna, and they got a site that said Grand Majestic Hotel .something.com. That something was a different company than the actual hotel. But it says something like what was the one that they used? Was it reservations.com?
Guest reservations.
Guest reservations. There it is. Yeah. So it was Grand Hotel Majestic guest reservations.com. Yeah. And what does that sound like to you?
Sounds like the people that are running the hotel have part of it is guest reservations. You're using them to book something.
Right.
So it sounds like.
Right.
Yeah.
But here's what happened. It should have cost them about $5,000 for the 8-night stay in a regular old room if they went through the actual hotel's site. But this site charged them $16,559 for the same trip.
Now, they did get the rooms at the place.
Right, because they're
Yep.
connected with Expedia or
Yep.
Travelocity or whomever. Oh, yeah, there it is. Grand Hotels, yeah. But you think you're getting the hotel, but you're getting something entirely different.
You think you're dealing with the hotel, airline, other provider, but they add on these extra fees. They add in upgrades, and they make misleading promises. But now here's the fascinating part. There's a great article because somebody at the New York Times spent a lot of time digging into this, and you had to do a lot of digging to get to the bottom of it. It was not easy. But this company, Guest Reservations, sources rooms from Priceline, et cetera. So they actually have the rooms. But what you don't know is you're paying all those extra fees. And
they don't let you cancel your reservations.
Correct. You're stuck. And they did this also to people on a Lufthansa flight, according to the article. There's additional charges there. So bottom line is the New York Times went to these people and said, "Hey, what's the deal?" And the people, first of all, very hard to reach anybody, right? Because everything now they hide behind a website.
Well, it's all web based. I mean, there's
can't
probably
find
just
anybody.
one person doing this
Yeah,
stuff.
probably. But then at the end of the day, they did finally find somebody. They said, we're not doing anything wrong. We're booking these rooms for people, and you got to pay us to take care of all this.
And that's what I was getting to at the beginning. This is not illegal. They're not doing anything illegal. They're taking advantage of the system and tricking you into going to a site that is not what you think it is. And they're sure not going to go out of their way to tell you.
No, they're making a lot of money. And as you said, generally once you're in, you're in. There's no way to get out, which is tragic as well. So this is a real problem. But I love the piece. I think everybody should read it who's traveling so they don't fall into that. But, here's the other thing that's when you type in fraud right now, according to AARP, they claim that 4 out of 10 American adults have had money stolen due to fraud or sensitive information obtained and used fraudulently. 4 out of 10. That's a crazy huge number. That doesn't even include the story we just told about, right? These are things like where people call you up. And I think the newest one here is they text you about a overdue traffic ticket that you need to pay right now, or the DOT will come by and TP your car.
Yeah, they're gonna tell you. In fact, there's one of them where they'll call you and they'll tell you on the phone that they're making an online arrest.
Yeah, that was the India one, right? Where
Yeah,
going to show up
making an online arrest. Now, I just did one that was in the article.
Yeah,
that was the Marriott University Park in Salt Lake City. So I literally just now typed it into Google. And the first thing that comes up, thank goodness, is Marriott. So Marriott is paying a lot to be
actually
number
use their
one.
own website. Yeah.
They're paying a lot to be number one in the sponsored results. So they're paying to be there. In the non-paid area, they're the first thing that comes up because they're Marriott. They own the hotel, or they run the hotel, or they franchise it. Anyway, what comes up right below Marriott? MarriottParkSLC.guestreservations.com.
These guys are prevalent. It's all over the place.
Then there's their competitor, MarriottUniversityPark.reservationstays.com. Don't those sound legit?
Yeah, totally.
And when you go to the Marriott guest reservation, what comes up is a select your dates and a beautiful site with pictures of the hotel. Sure. You got all the rates showing on that front page. Let's see. Oh, we can check rates. If I click a button and give them some information, I can unlock $25 off today's booking. Let's see
after you pay the additional $6,000, of course.
Oh well, of course. Let's check today's low rates.
Just checking
and see what.
While you're doing that, I want to mention a couple things because this comes up a lot. Oh, it's not working. There's a couple of things back to the fraud portion of all this that basically you should be aware of if you're not already. And number one is any unsolicited communication in today's world should basically be ignored. The IRS is never going to call you. The Washington State Department of Transportation is not going to text you. If there's something really wrong, guess what? They'll use the old-fashioned way. They'll send you a letter. And to that, you can respond. That's one. Number two, and a lot of people do this. I'm still shocked when they tell us. Most people still only use one password. And you really should have more than one password. Because if you have one for one account and it works for all the rest of them, whew, you could be in real trouble. Those are a couple easy ones. And then the other one is if you're very active on social media, apparently the people that do that, they get in a lot of trouble because if people figure out identity theft. They figure out ways, your patterns, who you are, might allow them to log in, and so you should be doing that. And then finally, and I think Herb Weisbaum is the one who suggested this before, using protective software, antivirus, et cetera, anti-spyware, those things. And I know the Macs do this very well, Don, which is one thing you taught me 10 years ago, that you don't have to worry. And then the other one is I basically never do anything that in any way could be risking my financial well-being on a public Wi-Fi. I just don't risk it. It scares me.
Right.
I won't do it, so.
You're really, really smart because on public Wi-Fi, there can be sniffers on those things.
Yep.
And get your password information. You don't do anything. You can do stuff that's not financial. I use public Wi-Fi all the time. I mean, whenever I'm at a hotel, I use their Wi-Fi. It's great Wi-Fi.
Absolutely. Yep.
But I'm not going to log into my bank account. If I log into my bank account, I do it over cellular.
Yep. Can't get on that one.
It's harder. You never say can't because if the
Today's world.
NSA, they can get on.
Okay.
So they could be reading it. And when it comes to booking a trip, do not go to reservations or Lufthansa.reservations.com or MarriottHotel.reservations.com or whatever it is. Go directly to the website, or better yet, download the app for the hotels you go to and book them through there. Or
that's smart.
If there's any doubt at all, you go to a website for a more obscure hotel that's not part of a chain. Look up that hotel, find its phone number, call the hotel, see if they answer the phone, not reservations, but such and such hotel. If they answer the phone at all, of course.
No, they're not going to answer the phone. Yeah. This is all online. And again, the article, the New York Times struggled to find anybody that would actually talk to them about all this. And of course, their response was, "No, we're a perfectly legit organization. We're not doing anything."
They are.
wrong.
And again, they're right. Yep. I'm not arguing.
Immoral would be my argument.
Yeah, it's certainly legal.
Right.
But it's taking advantage of people's stupidity. And I'm sorry, we are a lot more stupid than we think we are.
I would be
naivete.
Yeah, because I'd be quick. I was like, I just want to look. I got these 2 dates done. It's all booked. Blah blah blah. I'm that way. I admit it. So
yeah, and the other thing is, just ignore all the sponsored results. They're usually not the best results anyway. If you have to pay to be at the top, you're probably not the best thing out there. Usually the best thing out there comes up in the organic results, which are down a ways on the page. Okay?
Remember when we looked into all that with the old vestry to be under the paid results for like Bellevue Advisor and all that? That was crazy expensive. That was
incredibly expensive, and it just doesn't.
Years ago.
It doesn't do anything for you. People don't. They're not going to go. Oh, let's go to Google and get a financial advisor in Bellevue. That's generally not how financial advisors are chosen. If they are, then you're probably not going to get the best.
No,
so
likely.
Go to the organic results. And if you're really in doubt, well, here's a solution to almost every problem you could ever have financially. Call us. Literally, call us. Now, we're not going to answer the phone, but we will get you on the phone. All you have to do is go to 855-935-TALK and call us 24/7, and we will set up a call with you on the podcast. Or you can send your questions in at talkingrealmoney.com, written or spoken. But there's another way now. Just call 855-935-8255. We love taking your questions and calls, and let's go to one of them now. Bill is part of Talking Real Money. Hey, Bill, how are you?
Things are good.
Glad to hear it.
good with my investments, but I'm not sure how good. That's why I'm calling.
Good, but they could always be better, right? We always
Yeah.
that's the one thing people always ask us about. So, anyway, so what is your question today, sir?
Well, my dad was a financial advisor, and I trusted him and end up with more money than I thought we would ever retire with. I realize now that he was a pretty aggressive investor. And now that I went with a fiduciary company, my returns over 10 years are like just over 6%. And I have more money now than I did when we retired 10 years ago. But I didn't know if 6% was great or average or poor. I don't really have anything to compare it with.
Yeah, first of all, to your dad, that's what a great legacy, and the fact that you've obviously continued to be an investor and saver and not a big spender because you got more than what you started with in retirement. So good for you. That is awesome. And to the this is something that comes up pretty often. People will come in and go, look, I made a lot of money last year. My portfolio is great. And I'm going to look at it and say, well, what's it invested in? I really need to know that rather than just looking at the return, right? Because returns can be very random. Periods of time can be random. Specific securities you hold could be random and really affect returns. But just in a general sense, because you mentioned a portfolio 60% in stocks or equities, 40% in bonds. I went back and looked. Mark Hebner of IFA has a wonderful website where he's got every number every number. And you can actually go there and look at any portfolio and see what index-like returns have been after his fees too, by the way. So and his fee is pretty reasonable, I think, at 1%. So he has 98 years, 3 months worth of data. That's a lot of data. And according to him, the return of a portfolio, a globally diversified portfolio, 60% in stocks, 40% in bonds, would be 8.4%. So, but you mentioned 10 years. I also looked at that. The 10-year would be closer to 10% because it's been a pretty rich time here, even with the crummy 2020 we have it in there with stocks and bonds both losing money. So that'd be closer to 10. But to your situation, sometimes there was a person I talked to recently who said, I lost money in 2025. And I said, now that really worries me because it was a pretty good year for stocks and for bonds. Then I get worried. But if you told me, hey, I made 6% a year for the last 10 years, I wouldn't be concerned about that. But I would question the following. How diversified are you? Do you have, big companies and small companies? Do you have growth companies and value companies and international and emerging markets? Something we're going to talk about in the weeks ahead because a very well-known promoter of emerging markets just passed away. And I went back and looked. And again, according to IFA's website, it's been the best performing asset class going back almost 100 years, a little over 12.8%. So if it was my money, I would want to make sure that I'm fully, really diversified. And a good fiduciary advisor is going to do that. They're going to own not just the S&P 500, not just even small caps, but small cap value. And they're going to own international developed, and they're going to own emerging markets, and they're going to own value in all those places. They're going to be very diversified. A portfolio I'd like to see is between 10 and 13,000 stocks, really a lot of equities in there, and making sure that you get the opportunity to take it, the growth in all of those various markets, which especially internationally, I don't see people generally doing. So back to your question. First of all, if you're happy with 6.4%, I'm happy because it sounds like you are because you still have money. That's good. Part two is I would be personally looking at the portfolio just to see how diversified I really was. That would be something worth examining. And by the way, back to the return aspect. There's a lot of variables in terms of the actual return because oftentimes it depends on the day that you started. Oftentimes it depends on when you made withdrawals. There's all kinds of things that impact the rate of return, and is this internal rate of return or what measure are you using here? So in my mind, though, a 6.4 would not, or 6.04, I guess it was would not concern me. But it would be worth looking at sort of the actual portfolio makeup. And same thing you could hold in bonds too. How risky is the bond portfolio? Is it, all U.S.? Is it all government? Does it have any other types of bonds in it? Do you have an inkling around how diversified those two parts of the portfolio are?
Yes. I mean, there's a long list of funds, but as they explain their philosophy, it's not to be in the market, but to own the market. So they do have that broad
Good.
spectrum. And also that my return is after their 1%
Yeah.
fee.
Right.
So, and the best part is I don't worry about this at all.
That, and
if I
you know
was
what? That's worth
managing-
so much. Right. I mean, it's huge. And that's, people have a tendency to overlook that and say, well, I would have made more. Yeah. Okay. I would have made more if I'm not paying somebody 1%. Sure. I would have made, more had I been an X, if you'd had, a lot more NVIDIA for the last 10 years, but you would have worried more. So I personally think if you're have made around 6% a year for the last 10 years, and you're sleeping well at night and you trust the people you're working with, I think you're probably in a pretty good place.
Great. I'm real glad to hear that. And also my wife has zero interest in this stuff. So I assume she'll probably outlive me too. And that'll make with a smoother transition if somebody else is running it.
Couldn't agree more. This is, in my life, I have an advisor for that exact reason, because I suspect my wife will because she works me hard all the time too, that she'll outlive me, and that she will need somebody to, keep a close eye on the portfolio and make sure all the planning stuff is done properly. But wow, it sounds like you're just in a really good place, and maybe it's the legacy of your father's fine work before you. But I don't see any reason for any major change, Bill. I think you're doing well.
Great. Thanks so much for the comforting response and for taking my call.
My pleasure. Thank you for listening, and we'll look forward to the next time.
Although by far the most popular way of sending in questions, and thanks for that question, by the way, is going to talkingrealmoney.com and clicking on the Ask a Question button. And then if you speak them, they go to the Friday Q&A podcast. If you type them, then Tom does this with them.
Yeah, I actually answer them. Well, I actually asked Don to answer them right here on. I don't want to do the heavy lifting.
And I don't know what the question is.
I know.
I never know because he forgets to send them to me.
I know. I'm bad about that. So I apologize for that. And but for Robert,
that's okay. I like to. This is good brain training.
Indeed.
Go
from
for it.
New Albany, Indiana, writes us. My net worth is $500,000. The maximum liability coverage for my auto and homeowners insurance is $300,000. At what point would it be worth it to get an umbrella policy? I got a quote from my agent, and it was for just over $600 a year. Wait, I'm going to first say I've had umbrella policies, and $600 sounds expensive to me. I mean, unless you have a lot of real
No,
estate
that's
or
about where
something.
they are these days.
Is that right? Because
Yeah.
that sounds like a lot. Maybe
Yeah,
they're
thanks to Morgan & Morgan for the people. There's a lot there, and not just them. There's a number of other firms. I don't want them to sue me. But thanks to all these personal injury and like the
et cetera,
these things are going through the roof. But basically, what you want to do is protect your assets. You want to cover your assets. So having an umbrella policy for $500,000 is probably going to be adequate. You may
So
not
he'd
need
have to lump on another $200,000 on top of the liability he has from his auto and.
Yeah. So I don't see you have to add a big umbrella. So
Well, this is Seattle. Actually, Seattle has very few umbrellas.
you guys don't
You know
use
that?
a lot of
I know.
umbrellas.
It's weird. It's, kind of a weird
it's funny
thing.
because it just drizzles. I think it's like I'm just going to get a little wet.
Any self-respecting Northwesterner doesn't call that rain. All right,
Right.
that's not real rain.
Or you find places like Bellevue Square where you never have to go outdoors.
Good point. Here's the thing. Personally, if this was me and I had $300,000 on homeowners and auto and my net worth was $500,000, I don't know that you need to do an umbrella for another $200,000. I think in the past I've said if you got $1 million worth of stuff and you really only have $300,000 in liability coverage, then I think you should lump that in there because there's a greater risk, right? I mean, if somebody slips and falls at your house, your teenage daughter, runs somebody over. That didn't come out right. Your teenage daughter, she's going to be mad.
Teenage son runs someone over. That's
Exactly.
Your teenage children run someone
Yeah,
over.
Good point. Then it could really be helpful. So, but that still sounds like a lot to me, and I'm going to go look and see what I'm paying for my umbrella too, because I don't think it's even that much.
I bet it's close. Bet
Okay,
it's around
maybe.
5.
But I don't know that I'd be running out in your situation buying. I might wait a little bit as your net worth grows, and maybe you go get one. So
you have to weigh the risk and the reward, really. I mean, when you think about it, $600 is not a lot of money if you ever get sued.
right.
But what are the odds of you getting sued? What are the odds of something happening on your property or with your car that, they're going to tell you it's high, but it's not. It's really not. It doesn't happen very often. It's more like they're anecdotal tales that resonate with us and really scare us because they sound horrible when it happens. Like that $10 million cup of coffee at McDonald's or something.
I was remembering the last time I went. So the last time I tried to get them, I don't have umbrella right now because they wouldn't do it. Do you know why? The first
because you live on the water?
No, that was not it.
Oh.
No, because I hosted a podcast.
Oh.
I said, we wouldn't. I said, oh, come on.
Oh, that makes sense because
the risk.
Yep.
We could say something about somebody. So if I wanted one, then it turned out, by the way, because my house was built about the time George Washington was in office, that they wanted they wanted to know a bunch of whole things about the house that I couldn't find anyway. So they wouldn't do it for that reason. But it was the podcast thing, and so now to get an umbrella policy, I'd have to lie and tell them, no, I don't host one. What's that?
Did you get a price?
Not even got to that point. When they started asking all the questions, they're like, no, can't do it. So,
well, I'm just going to do a little checking. I'm going to look this up because.
So you better go back and look at your homeowners to see if they cover your outrageously controversial comments on your podcast, my friend. They might change their minds. In fact, if they know who Don McDonald is, you're out.
Huh. Hold on, I'm just checking what the premium is. Let's see. Typical real world range is $300 to $600 for $1 million. Let's see.
So he's paying on the high side.
He's on the high side.
Yeah.
But maybe he has higher risk. You see, that's the thing. I'm going to check the podcast host thing and see if anybody says anything about it here online. Let's see. It says, you can get an umbrella policy that will cover you for defamation.
I can't even remember the carrier who might have been Progressive, by the way. So I don't want to defame anybody, and I don't want to get sued by the people that won't insure me.
You don't have insurance.
Exactly.
I'm going to do some checking into that just for fun because
I just remember
I'm a podcaster
thinking,
too.
Come on, I know.
Believe it or not, just so everybody knows. Yeah, I am too.
I'm a podcaster.
Just like Tom.
You're a podcaster. I could be a podcaster. Anyway,
I'm a podcaster like another 33 million people in the world. Yeah,
whatever it is. Today,
everybody's a podcaster.
Yeah. Or says they're going to be.
Yeah.
Remember those days where everybody's going to do their own podcast?
We're serious about this. We're actually ranked
5 days a week.
No, ranked on the
people rank me all the time.
Popularity.
That rank. Okay.
Podcast popularity.
Rankings.
Yeah, rankings. All right, we have to wrap another show up. Thanks for being a part of it. We really do appreciate you being there. Give us a call if you have a question at 855-935-TALK or send your questions in at talkingrealmoney.com on the contact form. And if you really have a big, long one, it's like a planning question, then what you should do is probably spend a little time with one of Apella's fiduciary advisors. And here's something we will absolutely promise you. And we can't promise much. We promise you they're not going to charge you, that they're not going to pressure you into buying or doing anything that is going to cost you money. You're just going to get up to an hour's worth of help. And that's all. You're not going to get much past that because then we need to charge you for it because that's how we make a living. So does that make sense?
I don't think so, but I don't think at this point it really matters because you're in the last 1/2 of 1 minute in the fourth quarter. So it's,
right.
It's getting darker.
So go to talkingrealmoney.com. That's our website. And then click on the button that says Meet an Advisor. It's just way too easy. And please tell everyone you know everywhere on the planet, because anyone anywhere can listen to us, that they should be listening to, what's the name of the show again, guys? Talking Real Money.
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions.
Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy.
Information presented on the podcast is not personalized investment advice from Apella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Apella Wealth, a fee-only registered investment advisor.
Please see Apella Wealth's ADV Part 2A on our website for information regarding Apella's fees and services.
Apella Capital, LLC, DBA Apella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Apella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. I think I need a nap.